This is ETF Minute, and today we're talking about the world of covered calls. Now, a lot of people like these strategies when it comes to ETFs because it creates income or generates income. But how does it actually work? When is it appropriate? For that, let's bring in George Lagoudakis, who is the VP Portfolio Manager in Capital Markets at CI Global Asset Management. Thanks so much for joining me, George.
Thanks for having me.
Let's start with the basics. What is a covered call?
A covered call is a portfolio of securities that you own, but you're selling options, typically short-dated, to generate premium but cap the upside on a percentage of the portfolio.
And how should investors think about the market environment in which using covered calls is the most advantageous?
I think you could argue it's advantageous in all environments if you're looking for the best risk-adjusted returns. But generally speaking, flat markets benefit as you keep the premiums and aren't getting exercise on the options. In a down market, you'll likely outperform as well. In a slightly up market, you can also outperform. That's probably actually the Goldilocks scenario, but it's in the raging, bull market going up, a lot every month where you're going to underperform.
Doesn't that feel like the kind of market we're in right now? I mean, how do you apply covered calls in today's environment?
Yeah, I think today they're even more important because inflation is high and it's likely to stay above trend, in my opinion, and lead to a stagflationary environment. And volatility, I think, is also going to be higher than we've seen the last decade. So those are both going to benefit tax advantage income, which these products provide, and monetizing that higher volatility.
How active do you have to be when you're using these strategies in an ETF?
Yeah, you can be active, but I think it's more important to be systematic and in liquid securities because, again, options are volatile and trading them every day. They're wider spreads. They move quickly. So execution is very important in this space.
Let's use examples to kind of illustrate this. We'll talk about two markets right now. First, let's start with tech. So you've got this covered call strategy in tech. The ticker is TXF, the CI Tech Giants covered call ETF. So raging bull market in tech. What do covered calls do for an investor in tech?
Yeah, I think it could allow you to switch over to a portfolio that's now going to give some cushion to the downside, and it's going to allow you to create a payment because the technology sector typically doesn't pay dividends or they're very low, but this lets you monetize their higher volatility because the tech sector generally has higher than average volatility. So you can create a solid income stream off that. So I think it's quite suitable.
And what about gold? Because you mentioned gold, which has already run up so much, but the bullion seems to be like kind of consolidating at these levels. How do you think about what covered calls do in commodities, in the mining sector? Gold, for example, you've got that CI Gold Plus Giants covered call ETF.
Yeah, I think the commodity sector makes a really good case for these products. The gold sector is one of the only sectors where volatility rises with price. And these sectors tend to be more volatile. So I think people stay in the sector longer when you've reduced volatility by selling the volatility and selling the options. It's gone up a lot this year so far, but the miners themselves are still trading at a discount historically versus how much money they're making. So their cost versus where gold is or the price of silver. And if you look at positioning the futures market or ETF holdings of physical gold, they're nowhere near their all-time highs. So there's room to run, I think.
So do you have these strategies in only select sectors, or could you do covered calls on any sector?
You could do it on any sector. We cover all the major sectors in North America, and we have a product as well that owns the basket of those, like a multi-sector.
George, thank you so much for joining us with these insights.
Thank you for having me.
That's George Lagoudakis joining us from CI Global Asset Management. If you're interested in learning more about these ETFs, go to the link in the show notes.